2 comes right over here. And if 90% of the time, let's not say 90, if 60 or 70% of the time, price comes to your area to hit take profit, but instead of hitting take profit, it comes back down to break even, and then it goes in drawdown and hits a stop loss. If that happens 60 to 70% of the time, that means that out of that 60 to 70% of the time, 100% of the time, you can secure profits. You can secure it 1-to-1 and leave the rest running. Doesn't matter, man. Who cares? Like, look, if I'm going to have a 1-to-1, like let's say my 1-to-1 was like right over here. If my 1-to-1 is, let's say, right over here, right? 1-to-1 risk reward. If my 1-to-1 is right over here, I'm going to be okay with that. I don't want to aim for that 1-to-2 or that 1-to-3, because you got to be able to grind out small wins. Because if your 1-to-1 is right over here and you're actually making something back, that's fine. Another thing is when guys say, okay, like, you know what, I'm going to enter, like, let's take a look on the 15-minute time frame for like better candle structure. So let's say we're looking at the 15-minute time frame and someone is planning to enter right over here. If you're planning to enter right over here, your stop loss is about like 46 pips. You're trying to win like, 54, 52 pips, whatever. But if your take profit is smaller, if you have a negative risk reward to begin with, and you execute the trade, if you execute the trade at this point, what happens when you move your stop loss? Now your risk reward is 1-to-1. So this is the problem I have when people say, you know what, Raja, my trading plan says my risk reward is 1-to-3, and I'm going to stick to 1-to-3. I don't want to execute a trade because it has a negative risk reward. I don't want to execute on it. That's the problem right over there. So for example, I took a trade earlier on. It was a sell trade. Let me show that to you over here. Go to viewing options, deal map. All right, let's take a look at this right over here. So this is a sell I took. Sell, fell about 18 pips. So when I took this trade, on this trade, if I take a look at this, let me bring up the marker. This is where price was already falling. We had closed below this area. Over here, my stop loss was right up over here, and I was aiming for maybe around 26.48. And even though this was a positive risk reward, as soon as price broke below this wick, I brought my stop loss right above this candle. Now, when I moved my stop loss, my risk reward went from 1-to-1 to 1-to-2 at this point. Because your risk reward is always subjective. You can't really say that, my risk reward is going to be like, highly positive and like, I'm just going to execute on that. No, that's something which you have to unlearn about risk. Risk is not about aiming for these like, scenarios where you get, like, say, for example, this is like 1-to-2.5, or if you tighten up the stop loss, you say, okay, like, what, now my risk reward is 1-to-4. You see the RR, 1-to-4. How often your 1-to-4 is going to hit? How often? How much? How many more trades are you going to lose this way? Because if you look at all your trading history, look at all the trades where you had 1-to-4 risk reward, or where you had 1-to-3 risk reward, you're going to find out most of them cut you at break even. Which means if you look at those trades, you could have easily, like, let's say if I keep my stop loss right over here, you could have easily secured 1-to-1. This is 1-to-1. You could have easily secured 1-to-1, and then you could have let 10% run. And if that 10% runs all the way right up over here, that's also good, because now you're still in the trade, because you're gaining confidence in letting trades run. Like a lot of you guys, you will have good analysis. You will have great chart markups, and you say, okay, like, what, I'm expecting price to, like continuing to push all the way up. You're going to get in the trade, you're going to get to 1-to-1, or you're going to get in some sort of a profits, and then you're going to start to like, panic a little bit. Man, like, what, I want to secure profits, You're going to secure profits. Price will hit your targets, and then you'll say, you know what, like I missed this trade. So having 1-to-1 risk reward is not a bad thing. If you think price will reach your like 1-to-4 target or 1-to-5 target, you can